Economic headlines, stock market resisting gravity, specific stocks, particularly healthcare, Estia and Medibank. Government super changes, not as bad as we think for small business. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Okay, let's start off, Paul. The headlines for the week. The Reserve Bank, I guess, was a starting point, didn't move on interest rates. What do you think about that?
Yawn, Peter, as expected. Surprised by some of the commentary this morning. I mean, clearly the Reserve Bank's got to put out a statement of about 600 words.
Yeah.
I think the two interesting things in the statement were pointed to problems in the apartment market. I think everyone knows that. I don't like the idea if you're settling on an apartment in Melbourne, just look at the skyline down in Melbourne, you can see some of the dramas there. Same also in Sydney and parts of Sydney. The other thing it pointed to perhaps was, look, it had to give a reason why it wasn't going to cut and why it was going to take it off the agenda. We've got Brexit, we've got a few uncertainties, an election to get through. I think it was just one of those statements that said, look, we're not in any hurry, and I don't think there's any
Could it be that the Reserve Bank actually thinks the economy is not as bad as the doomsday merchants
It could be that they think the 1.1% growth last week wasn't too bad.
Yeah, that's right. Yeah. But also, Paul, the thing I'm intrigued about here is they seem to mention the oversupply of apartments in Melbourne as in a sense, a good thing to take the lid off the high house price boom?
Yeah, they almost were saying, look, the work we've done around the property with APRA and sort of getting the banks to cut back on their exposure to investment lending, that's all really good because it's slowed the market down. Yeah, and I think you're right. I think they're sort of saying, it's a bit of sort of, look, we've done a pretty good job.
Yeah, it's not like a housing bubble bust. It's kind of like the way they wanted to slow the whole show down.
But I think there are obviously precautions around the apartment market. Everyone knows that's got some challenges ahead.
Yep, okay. Let's now go to some, like the stock market. It's resisting gravity. You're like, why isn't it falling? June is the worst month.
Yeah, look, it's interesting. I mean, maybe it's this, that the impact of this lower interest rate, eventually the buyers just come back. I mean, I still think it's going to struggle, but, the last couple of days haven't been too bad. I mean, obviously the leads, the US last night, over 1,900, your highest position since July last year. I mean, where's all the negativity of the last 8 months ago when the US is back to where it was in July last year? You remember how the world was going to implode in August, September last year, then again in January and February, and all the doomsday merchants were out there. Yeah. But it's now back to where it was in July. So, we're still at sort of this 400 just below. I think we're going to do some work. It doesn't really want to go down yet, but there's not a huge conviction just to buy it just yet.
And I guess if interest rates are so low, where else are you going to put your money? And so people just sort of trawling around trying to find companies that look like good value.
I think there are some incredibly expensive companies. I mean, Tony Featherston wrote about it last week. You've got massive, there's incredible multiple companies like Transurban is trading on, Sydney Airport.
And people are still recommending them.
People still recommending it. So it's property trusts in the fives. This pent up demand for finding anything that's got a little bit of yield is crazy. But no one wants to touch the banks too much yet. Although Combank and Westpac the last couple of days, they're not going to cut deal, but there's got to be value in the banks there still.
Yeah, I agree with that one. All right, now let's talk about health stocks, Paul. You're keen to talk about Estia and Medibank.
Well, look, healthcare was the best performing sector in May, up about 9.5%, up about 11.5% year to date. All the good demographics. My caution about healthcare is you've got to be careful what stocks you're going for. And I think that both what's happening with Estia and Medibank are examples of two you've got to think carefully about. I've had a lot of people write to me over the last couple of years telling me about how great Estia was going to be, how it had this beautiful roll-up strategy in aged care. I've always said, look, if you've ever been involved in aged care, if you had a relative involved in aged care, you wonder how anyone could roll that stuff up. It is so regulated, and of course the government's now investigating Estia and saying, well, we've been paying you too much, so the market's come off a bit. So my caution that. The other one is Medibank. Look, $3.19. I think it's a fantastic. Look, it's for people who've got it at $2.05 in the float. I think it's incredibly overvalued. I mean, it's a cost down story.
So don't buy it now.
I reckon if you had it at $2.05, I'll be writing about this. I think this is in sell zone. I think you.
When would you buy it again, Paul? 250,
about
270?
250 again. Yeah. I mean, I think my caution in healthcare is not that the demographic, there's some really good tailwinds, right? That's all what we've known about that. That's what's impacted the CSLs and the Ramsays and the Cochlears. But some of the stocks are getting very expensive, and you've got to break that factors down on a stock by stock basis.
Hard question, dividend yield for Medibank. What's it about?
It's only about 3.4%. So,
Okay.
why would you hold it? Health insurance, to me, I reckon a huge headwind because I think it's getting so expensive.
Okay, now let's talk about the superannuation proposals from the government. And one of the areas that a lot of people didn't like was the fact that if I sold a business and I tried to roll that money into super, I'm limited by this non-concessional 500,000 lifetime cap, and also the fact that I can't put any more than 1.6 in there unless I can be taxed at 15%. What is your view on how small businesses have been treated by super?
It looks like it's not as bad as people feared. That the contribution you can make if you sell a business after 15 years is still available. And I think that's up to $1.395 million.
It's called
$1.44 million.
It's called 1.4.
It's still available. You can get that money into super. So look,
from the sale of the proceeds can roll into super without any tax on it, and then on top of that you can put the 500,000 lifetime in it. So 1.9 for a business owner, and if that business owner is married, another 500,000 from the spouse. That means 2.4 between a couple. Not bad.
Yeah, it really is a small business. There's a turnover limit. I think it's $2 million. I think, Peter, from memory.
Or asset values
and asset value under 6 or something. So small business owners can still get money into super. The only change was the non-concessional cap. Of course, the profit on the sale from the business was never included as part of the cap in the first place. It wasn't counted as a non-concessional contribution. So it looks like it's still there.
But if you own it less than 15 years, it's probably the most you can expect is like a $500,000 shift from your proceeds into super.
Yeah, look, a complicated area of the law. One we'd always say go and see an accountant about.
Yeah.
If you are retiring or selling your business, and
it is complicated.
It is complicated. Really worth getting some advice to make sure that you use whatever you can inside both the current and the proposed super legislation to get that money in.
And the complication is probably one of the reasons why the government hasn't been trying to spruik the good side about this.
They can't
lots of people
they don't know what a
excluded.
transition retirement pension is, so you can imagine when it's coming to small business, they've got no idea. See your accountant. I think that's the best advice we can give you.
Without a doubt. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.